Hello and welcome to Scrolling with Ceazor. Today is January 13th, 2026. I've got a whole bunch of tweets for you today to go through. I will preface that with this is not financial advice. This is all my own personal biased opinions on the news that comes through my feed. So I've selected a whole bunch today, so I'm going to try to get through this as fast as I can. See if I can get under 30 minutes. I don't think so because I've got a little bit extra today than usual. Okay, so let's get right into it. So the first one here is from Polygon. So breaking news, Polygon has become a US regulated payments platform. We are acquiring CoinMe and Sequence to move all money on chain. So regulated money movements in 48 states, fiat on and off ramps, 50,000 fiat to crypto locations in US, easy onboarding with wallet infra, and one-click crypto transactions across chains. So that's pretty cool. Yeah, I don't really have much more to say on top of that. You can read there. They have a long tweet thread about this and go into a little bit more detail on each of those features that they're acquiring. But it's pretty good to see that like Polygon is still kicking it, and they are actually moving forward in ways that are making an impact for crypto in general, as well as their own chain. So you can check that out. Okay. Next one we have is an article by Lido Finance, which is Lido Staked ETH. And I'm just going to read the title for you, and you can kind of come and check out the article. It's not too long. It's maybe a 2-3 minute read. So it's like Lido version 3 plus North Stake simplifying institutional Ethereum staking with ST Volts. So basically speaking, they're trying to, we know that like there's institutions that they want to participate in ETH staking, especially the ETH staking ETFs. So I believe that this is a way for some of these institutions to kind of get some of that ETH staking yield in a way that's like designed for them and probably regulated and maybe even whitelisted and so forth. So you can read through this article and find out a little bit more about it. Lido Staked ETH is definitely one of the leading protocols for staked ETH, but as always, I always tell you, you know, us degens, maybe we should look at the other ones to try to make sure we don't get into that fear of Lido taking over dominance of the staked ETH percentages again. So moving on, we have a DeFi investor. He was on the show yesterday, and here he is again today. He tweeted the dollar, that picture of the dollar's worth purchasing power constantly going down. Like it goes up a little bit in like 1930s, and then it's all cut down and down. I really like this picture because it really kind of shows you that, you know, like what a dollar can do for you, and you can see it's almost all down. It's kind of not as drastically down now as it has been in the past, but it's still kind of constantly going down, so forth. So it says fiat will inevitably keep trending to zero. Never forget that the goal is to accumulate as much scarce assets like BTC metals, shares, tokens, and highly profitable companies as possible. Too many people look at the 1 minute chart and miss the big picture. I was thinking about this yesterday, and this is something I need to research a little bit better. But as far as I know, the U.S. dollar system doesn't even have the ability to actually burn their token. It's like a constantly inflationary token. Like, well, maybe we don't call it a token. I don't know what to call it anymore. So like they don't even have the ability to burn the token. Like, I guess they could always just change the supply. They could always take in some supply somehow and then burn it, like whether it be like, you know, burn some of the taxes. But their system is like they can't even pay for everything without paying with inflation. So like it's impossible for them to burn any of the supply. So since they can't burn the supply, the dollar purchasing power will never actually increase. Like there is the idea that like if inflation is less than the productivity or the efficiency of production, then the purchasing power kind of goes up. So for example, like if you think of $1 can buy you one egg, right? But then they figure out how to make chickens lay 2 eggs at the same time. Now $1 can buy 2 eggs. So then your purchasing power goes up because the efficiency of production has increased. So it's kind of a juggle between that proficiency of production and the inflation of the dollar. But there's no like way, as far as I'm concerned, as far as I know, there's no way for the government to actually burn those tokens. They don't have a system where they're actually decreasing or deflationizing their fiat currency. Now you will notice that, you know, everything has been gotten a lot better, like at producing. Production, like efficiency has skyrocketed, but everything keeps getting more expensive. So all that tells me is the government is printing way too much. They're inflating even faster than the growth of efficiency and productivity. Okay, so let's moving on. Okay, I don't want to dwell too much on that. So Inagus DeFi, he does a lot of tweets. Sometimes some of the things he says is controversial, but let's see what he says here. ETH could outperform BTC this year. Quantum at FUD will continue to 2026. ETH is a clear roadmap to prepare. BTC is stuck. Ethereum is actually scaling. Gas limits, blah, blah, Zk EVM. And then degens loaded up on ETH before the bull run and got disillusioned and sold for BTC. It was fun to seeing the playbook reverse higher. So I'm kind of with him on this. Like I don't want to go through his exact points exactly, but I'll kind of spill mine onto here. And that is like, again, I think I said it yesterday, like ETH, in my opinion, isn't the best asset in the world, like above everything, because you can permissionlessly trade it. Like BTC is great and all, because it's like our meme coin, our initial OG meme coin. And, you know, there is the whole, you know, store of value and the store of power, the proof of work mechanism, and like using wasted electricity, all that kind of idea. However, ETH is like, it has the most on-chain permissionless liquidity. You can CDP it in the most places. You can borrow versus it basically permissionlessly. There's the most amount of TVL to borrow versus it permissionlessly without custodians, right? And then, like, you know, it's used in an abundance of liquidity pools to provide value to other tokens, as well as to pay gas, or, you know, to build blocks and to update the ledger on Ethereum. To me, it's the best asset in the world, and I don't hold almost any BTC, and almost all of my, you know, big amounts of money are in ETH. But, you know, the price I could use some more price action, but I'm okay as long as it doesn't dump like crazy. If it crabs for the next 5 years, I'm okay, because I'm earning quite a bit of trading fees by providing liquidity. Let's moving on. Detective. Okay, I've never seen this guy before. However, yesterday something crazy kind of happened. Apparently, as far as I know, the former mayor of New York City decided to launch a meme coin. I don't know which chain this was launched on. Probably Solana, but I don't know. There is a tweet here that kind of shows a block. That doesn't tell me if it's Etherscan or what have you. Oh, Solana Scan. Yeah, so they launched a meme coin called New York City, NYC, and come on, guys, like he's a politician, and he launches a meme coin, and everybody's angry that he, you know, rugs it. So he launched this meme coin. These Solana degens drove it up, and then he pulled the liquidity out. So let's see what this guy says here. So the problem is that they removed $2 million, roughly $2 million of USDC from the liquidity. They added it back 1 million. They added back approximately 1 million, but it's out of price range. So they put it below 40% below the current price. And they're doing 500K buybacks, which can be covered only with trading fees. Like, when are you guys gonna learn? Like, a politician doesn't care. The regulators don't care. The law enforcement don't care. Like, some guy tweets out, "Oh, this is in New York City," and people just run this thing up. They put all their money in it, and they get rugged. I think it's at this point, like, I feel bad for the people who get rugged, especially the people who don't really know better. But like, I kind of believe now that, like, if you're buying any meme coin by any celebrity, then you don't deserve to get rugged, but you better expect to get rugged. Like, it's a pointless meme coin that does nothing, and except some guy who has a following shield it. Like, I'm done with it. I don't want to talk too much more about it. Let's move on. So we have Redphone. Whenever Redphone kind of tweets, I always read. This person doesn't tweet a lot, but he or she, I'm not sure, they tweet with insight and intelligence. So let me read exactly what he said. So he's retweeting an article that's called "ICOs are back, and I just bet my career on it." Okay, and then Redphone quotes him and so forth, and just says, "The VCs are evil, and the founders are grifters. Narratives are super lazy. Most founders are just doing what the last successful project did. VCs are optimizing their LPs. Retail is trying to get the edge. Everyone's playing the game they were handed. The problem is the game itself." Now, I don't think ICOs are a terrible thing, like, and pre-sales and all this kind of stuff. If the team is like legitimately building something that they believe in and that is innovative and has some sort of product market fit and can generate fees and useful, like I participate in some ICOs, not a lot of them, but like everyone is trying to get early so they can sell the pump, right? So they can make money on the pump. And that's what VCs tend to do, some of them, right? But VCs, it's not usually their money. Like they have an obligation to their LPs, the people who provided them with money, to make them money. And in order to them to actually make them more US dollars, they must sell. There are probably some VCs out there that are more concerned with the space, and they're like, they want to invest in products and they want to generate fees. They want to have stake in a protocol that's going to generate fees. But the vast majority of them, they are pump and dumpers, right? So of course that's the case. So people who are all trying to play the same game against each other. It's like trying to swim with the sharks and eat more sharks, eat more meat than the sharks, or eat more fish than the sharks. It's tough, okay? So what I suggest people do is, do some due diligence, find a protocol that you like, follow that protocol you like, support that protocol you like, and use the protocol that you like. And hopefully it will generate fees for you. Of course, I've made some bad bets and some good bets, okay? Let's moving on. Wrecked News. I haven't seen these guys post an article for a while. However, they have been posting articles. I would highly suggest you check them out. They do postmortems on hacks, but they write them up in a film noir style art. Like the articles are a genuinely literary work of art in some ways. Like it's enjoyable to read. Sometimes it's a little bit hard because it's like technical. However, I enjoy reading their articles. So here is first major hack of 2026 as TrueBit protocol was drained for 26 million through an overflow in unverified bytecode. The same attacker hit Sparkle weeks ago. Old code keeps bleeding. The archives have clearly become a shopping list. So, yeah, if you're in a protocol that's very old, I would highly suggest you consider asking the team what's going on, double check that, maybe even consider pulling your liquidity out of there, because some of the very old stuff has been attacked. Like even like the version 1 Yearn vaults were hacked, because at that time we didn't know things, or the hackers didn't know how to hack it, and they're getting smarter and smarter and smarter and able to do this. So I would highly suggest you kind of check that. One thing that's very interesting here that I haven't really looked at is it says it's an overflow in unverified bytecode. So what does that mean? Means that if you go to Etherscan, sometimes you will see a contract is unverified, which means you can't read it. It's not written in solidity. It's written in like basically cryptographic bytecode, and like no one can read this, no one can understand this, but somehow it seems, I could be wrong, it seems that so TrueBit had some unverified bytecode and the hacker was still able to hack it, which is quite interesting, and so forth. So you can check this article out, read a little bit better, get a deeper understanding of how they lost 26 million a couple days ago. Moving on. Mega ETH says tag your favorite Mega app and tell them to hurry on deploying on Frontier. We don't have much time left. This is one of the things that I always think about sometimes, and sometimes I think about it negatively and sometimes positively. I'm kind of on the fence on this one. I don't know how to handle this in my mind. Mega ETH is kind of long overdue, and they had this huge hype cycle, and then it kind of faded back down. And it's like when, and it just kind of gets dragged and dragged and dragged. I saw a tweet yesterday that's like, it was from some sort of game account, like talking about video games. And the thing that they said was, if you are not ready to deploy or, what was the word? Put out your video game in the next 2 years, don't tell us about it. Like, don't announce it. Like, if it's not almost ready, don't announce it. And I kind of thinking that there's some validity to that in this. Like, Mega ETH got that huge hype, and now it's kind of fading down, and we're waiting, and people in crypto have a very short, like, attention span. Even myself, like, I'm guilty of it for sure. And it's like, how long is it going to take? People are just going to be, oh, finally, and then they don't even care about it. Like, it's the longer you take to deploy and go live, the more FUD that can be dropped about you. Now, to be fair, Mega ETH hasn't been getting tons of FUD or anything, and I still think it's a pretty good protocol and chain to consider, especially using. But like, it becomes a maintenance thing. Now they're like asking you to just tag an app and tell them to deploy to Frontier. I believe Frontier is their testnet. So it's like they're kind of in maintenance mode now, as they go, just keep telling us about you and keep us in the back of your mind, and it's going to take a long, like, maybe there should be some unwritten rule of like how long, like you can wait, like, before if you're going to announce the project, how long before you execute and deploy that project and go live. I don't know. This is something we need to consider as the space, and whether or not it's damaging or beneficial, I don't know. Okay, let's moving on. So you have Georgios Konstantopoulos. I just thought this was kind of funny. I guess he's in Slack, right? And he's got this tweet and this snippet from Slack, and he's like, at Claude. So maybe there's some questions, and he's like, oh, I don't know. So let's ask Claude. And then Claude replies back, Claude is now only available for enterprise Slack workspaces. If you recently upgraded your Slack plan, try again in 24 hours. And then he says, go F off, right? Oh, F off. So this is one of the things that we've kind of gotten used to as society, and that is free access to services. Like, YouTube is free, Facebook is free, all of these things are free. Like, you pay with your data or your attention by marketing, like seeing ads or what have you. And we've become so used to, like, things need to be free and we need to use them, and they need to figure out how to make money but give the consumer free stuff. And that's kind of what this kind of feels like. I'm not saying he thinks that. I'm just saying that that's kind of like, oh God, he's probably just like, oh God, I can't use it anymore. We can't do what we were doing like before, and now we have to figure out some other way to do this, right? Or we have to upgrade Slack to enterprise so that Slack can pay Claude and Claude can make money. Everything costs money, everything. So the only way to like get around it is to find things that don't cost money, or that they've figured out how to, make money without charging for the service or the product. It's a tough situation, but like it's kind of like the way society is now. Let's moving on. Okay. Here we have Peter Schiff, the gold lover. So he says that silver is up 3% now, trading above $88 again. Don't pay attention to it. The U.S. economy is great, the hottest in the world. There is no inflation. How can you say there's no inflation? The dollar is sound. I don't know, man. Like, to me, there must be inflation. There's not tons of money flowing into the U.S. economy from other countries, or maybe there is. I don't know. But will gold and silver continue to go up? Of course, I think it will. Undoubtedly, I hold some gold tokens, tokenized gold, basically. I don't hold any tokenized silver, and I'm not sure if there is any right now. But he's you know who he is. He's shilling his gold all the time. He has his own gold, buy some silver on his own website and stuff like that. Now, I do think it's a good idea. Like gold and silver, it's battle tested, so to speak. It's passed the test of time. It has the Lindy effect. However, gold has less utility to me than Ethereum. I'd rather buy Ethereum than buy gold. However, you have to diversify. So buying gold is not a bad idea. Now, like, silver's at all-time high. Is it a good time to buy silver? Maybe not. Maybe wait for it to dip and then buy it. I don't know. Do you. But yeah, so Peter Schiff shilling silver on top of gold now. Okay, moving on. Okay, here we have Liquidity. Liquidity is a bold stablecoin. I love these guys. This tweet is pretty simple. The borrow rates for RETH, Rocket ETH, which is a staked ETH, right? So it has its own interest rate, is now under 1%. So you can borrow stablecoins versus your RETH. RETH gets interest. It has a APR of something like 2 to 3%, and then you can borrow stablecoins versus it for 1% on Liquidity. Liquidity is completely immutable, unstoppable. There's nothing they can change really to it. So yeah, you can check that out. Rocket Pool ETH borrowing. So collateralize your ETH again. Okay. Just for context, ETH on Bold is about 3.6%, and WST ETH is almost 5%. Based on this picture, it could change when you actually go to check it. So check it before you do it, right? Moving on, we have this protocol called ETH Strategy. I've talked about this in the past. I have a video. You can check it out. I really like these guys. There's an article here about like the roadmap of the ETH Strategy's next phase. You can read through that article. It's like a blog, right? And I would suggest you do it. I think I mentioned it a few days ago. However, I did find out recently that they are going to produce something new. So I'm kind of watching these guys. I would suggest you check them out, watch them, or even just use what they already have, right? What they already built is pretty cool, okay? And it's a pretty good entry point right now for this protocol. But again, watch my video, read the docs, understand how this thing works, because it's not a straightforward, it's not a meme coin, right? So figure it out and understand how it works. Okay, moving on, we have Peck Shield. Peck Shield has tweeted out that a protocol called Yield. Yield is it's called, basically, I'll read their Twitter profile thing. It says, the only DeFi vault you'll ever need, connecting capital of 50 plus DeFi protocols with continuous risk-adjusted optimization. So they has suffered a major financial hit totaling 3.3 million. So they were hacked. They lost 3.73 million. The loss occurred during the vault operation involving a swap from staked Go to USDC due to the extreme slippage. So this is not even a hack, okay? This is just like bad harvest calls. So they swapped staked Go, which is Aave stablecoin, to USDC and got hit with massive slippage. So 3.8 million of Go was exchanged for 100,000 USDC. That's brutal. That's totally brutal. So that's not even a hack. That's just a bad price checking. It's like they set slippage to like 90% or something. Who the hell knows? That's brutal. That's totally brutal. I'm sorry to laugh, but I can't believe it. Moving on. Here we have an article. This is an interesting one. Okay, so tuna. I don't know what tuna is. I saw this article and I've been talking about it with people in my secret select sandwich Telegram group. He wrote this article and he says, Base stole 3 years of my life. And then he goes to talk about this thing they produced. They wanted to put it on Base. They waited. Base did nothing. Base didn't retweet. Base didn't reply. Base didn't even group chat. Base did not support them. They were under the impression that Base would support them. And Base kind of says, build on Base and we'll support you. But they didn't. And then they went to Solana and they got support on Solana. Now, I hate to say it, like I agree with what he's saying in some ways, and in some ways not. If you go through, I saw someone comment on it and said that like basically these guys tried to rug their protocol. So it's a really tough situation. Like a chain wants to support their protocols because more protocols equals more transactions equals more gas paid, more fees, all this. So of course a chain wants to support their protocols. However, they also don't want to take the blame when shit hits the fan. So like even a simple like uncommented retweet, even just a retweet without like any context, without any message in the retweet, will be considered by some as endorsement. And then that endorsement, if it does get hacked or rugged or doesn't produce like value, right, then the users will blame the chain and say, you told me to use this. So it's like it's a juggling act, right? Now there is the other side of the coin as well. Are chains credibly neutral? The only one that I can think of that is Ethereum, and Ethereum has started retweeting stuff now. So it's like it's really hard to stay credibly neutral and support the projects on your chain at the same time. And then they also have investments, right? So in the case of Base, the very next tweet I have here, like you can read this guy's article. Basically, he's complaining of this. It's just the same. It's a complaint of all the way through, but read it if you want, right? And then the very next tweet I have here is, since launch, Aerodrome, all-time volume is more than every other DEX on Base combined. And the next quarter, Aero arrives on Ethereum with its best upgrades yet. Buckle up. So here's a case of they did get support. And did they pay? Did Base get some sort of deal? I don't know. As far as I'm concerned, as far as I know, they didn't, and they bought the tokens from the market. Maybe they bought at a very nice price, like when it first launched, and now they have investment, they have skin in the game, and they want to support Aerodrome. And Aerodrome's not a bad protocol either, right? Like they're not rugging, they're not a rug, but they did have Velodrome first, and then they produced Aerodrome specifically for Base. Why didn't they just bring Velodrome to Base? There must have been some sort of like demand by Coinbase to create a new one, a new version for them. So they got support, whereas this tuna guy didn't even get a retweet. However, you get my point. Like it's a really tough one. Like it's not a case of the best protocol wins. It's a case of, there's so many factors for a chain to consider if they should or should not support a protocol. Will they rug? Will it work? Will people want to use it? Do we have time? Do we have even like skin in the game? There's all of these kind of considerations to take into account. It's not a fair, it's not a equal playing field for everyone. If you don't have a very good business development team, the chances of you getting support from the chain are less and less, especially if the chain is quite substantial like Base. If it's a new chain, then you're more likely to get support. And if it's a chain like Base, you're less likely to get support, like socialized support, basically. Or I'm not talking about a grant or money. Moving on, we got one more tweet here. We have Rune Crypto. Okay, so this is basically just Eric Adams, the former New York mayor, has removed liquidity from his new meme coin NYC, scamming investors with over $2.5 million. So yeah, it's just, again, I talked about this already, but I guess this one was, I should have bolted it over with the other one. But again, I just remind you, if you're buying meme coins on Solana, shilled by some celebrity who's not a dev, who doesn't even have a dev team, who's just basically, he probably has some devs, probably some dev went to him and said, hey, listen, you want to make easy money? I'll do it for you. You do nothing. You just need to retweet. You just need to tweet out the things I tell you to tweet. And he's like, sure, right? And like maybe he considers this like funding for his next campaign. Who knows, right? I don't know, but it's definitely, the meme coins, the celeb coins. If you want to play that game, go ahead and play, but no crying in the casino, they say, right? So that's it for today. I hope this has been interesting, and thank you for listening, and goodbye. See you tomorrow.